how traders set up for the next day's trade? Well, today we're on a journey to unravel that mystery. We're diving into the meticulously planned process traders follow to gear up for the trading day ahead. This isn't a simple game of chance. It's a strategic dance that requires diligence, insight, and a firm understanding of market patterns. So grab your notebooks, because by the end of this video, you'll have a clear understanding of this intriguing process. Preparation is key in the world of trading. It's akin to a chess game where every move is meticulously planned and every potential outcome is considered. In trading, as in chess, the player who fails to plan is essentially planning to fail. The importance of preparation in trading cannot be overstated. It's not just about predicting market trends or identifying potential investment opportunities. It's about shielding yourself from the unpredictable nature of the market. It's about knowing your exit strategy before you make your entry. It's about ensuring that your emotions don't cloud your judgment when you're in the heat of the moment. Without proper planning, traders risk making impulsive decisions that could lead to significant losses. It's like sailing a ship in turbulent waters without a compass. You're at the mercy of the waves. Now that we understand the importance of preparation, let's dive into the actual process. Scene script. Setting up for the next day's trade is a systematic process. Let's start with the first step, analyzing market trends. This is where you put on your detective hat and delve into the nitty-gritty details of the financial world. You're looking for patterns, movements, and shifts in the market that could hint at what's to come. This could be anything from a sudden surge in a particular industry to a drop in the stock market as a whole. It's all about spotting opportunities and risks before they become apparent to everyone else. So, you might be asking, why is this important? Well, understanding market trends helps you predict potential price movements, which is key in making profitable trades. Next, we move on to researching individual stocks. This is where you need to roll up your sleeves and do some serious digging. You're not just looking at the current price of a stock, but also its historical performance, the company's financial health, and any news or events that could impact its value. You might spend hours poring over financial statements, news articles, and analyst reports, but don't be daunted. This research is crucial because it gives you a deep understanding of the stocks you're considering, allowing you to make informed decisions. Now let's talk about setting trading goals. This is the stage where you decide what you want to achieve with your trading. Are you looking for a quick profit, or are you planning to hold on to your stocks for a longer period? Your goals will influence the types of trades you make and the risks you're willing to take. Having clear, measurable, and achievable goals is essential because it keeps you focused and helps you measure your progress. Last but not least, let's discuss developing a trading strategy. This is your game plan, your roadmap to success. It outlines when you'll enter and exit trades, how much you'll invest in each trade, and what indicators you'll use to make your decisions. Your strategy should be based on your research, your goals, and your personal risk tolerance. Developing a solid trading strategy is vital because it provides a clear direction and helps you make consistent decisions, even when the market is volatile. So let's recap. We start with analyzing market trends to spot potential opportunities and risks. Then we research individual stocks to understand their value and potential for profit. Next, we set clear and achievable trading goals that align with our risk tolerance and investment objectives. Finally, we develop a trading strategy that guides our trading decisions and helps us manage risk. And there you have it, a step-by-step guide to setting up for the next day's trade. While the process may seem straightforward, there are common pitfalls to avoid. One of the most common mistakes traders often make is failing to conduct thorough research. You see, the market doesn't sleep, and the conditions can change overnight. Therefore, it's crucial to stay informed about the latest news, economic events, and market trends. Don't just rely on the previous day's data. Instead, make it a habit to gather as much information as possible. Another common mistake is setting unrealistic trading goals. It's important to remember that trading is not a get-rich-quick scheme. It requires patience, perseverance, and a sound understanding of the market. Setting goals that are too ambitious can lead to risky decisions and potential losses. Instead, aim for steady growth and consistent profits. Lastly, not having a clear trading strategy can be a major stumbling block. A trading strategy acts as your roadmap, guiding your trading actions based on predefined criteria. Without a clear strategy, you may find yourself making impulsive decisions, which can often lead to poor trading outcomes. In short, thorough research, realistic goals, and a clear trading strategy are the pillars of successful trading. They help you navigate the volatile waters of the trading world, allowing you to make informed decisions and manage risks effectively. By avoiding these common mistakes, you can significantly increase your chances of trading success. Now that we've covered the process and potential pitfalls, let's summarize. We kick things off by sparking your curiosity about trading, emphasizing the thrill and potential rewards of this dynamic field. But as we move forward, the importance of preparation came into sharp focus. It's not just about quick decisions, it's about the meticulous planning that goes before. Then we delved into the step-by-step process, showing you how to map out your trading day from start to finish. Remember, each step is crucial, from analyzing the market trends to setting your stop losses and profit targets. We also highlighted some common mistakes, like overtrading and not sticking to the plan. These can be costly, but they're also avoidable with the right knowledge and discipline. So there you have it. We've demystified the process and flagged the pitfalls. With this knowledge, you're now equipped to set up for your next day's trade like a pro. Happy trading.